Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, let us solve one example of profit prior to incorporation and profit after incorporation. This example was asked in SPPU examination. So the total marks for this example was 20 marks. So the example is on the screen. The Citizen Company Limited was incorporated on 1st July 2022 to take over the running business of Mr. Famous with effect from 1st April 2022. The following profit and loss account for the year ended 31st March 2023 was drawn up. So this is the profit and loss account for the year ended 31st March 2023. So in the debit side, we have salary, primary expenses, insurance, commission, MD that is managing director remuneration, rate and taxes, discount, advertisement, bad debts, net profit and the amount of the particular items. And in the credit side, we have gross profit 1,05,000 and additional information is provided. Bad debts rupees 350 related to sale affected after 1st July 2022 and the remaining is related to pre-incorporation period. That means out of the bad debts, how much is the bad debts? 1250. Out of 1250, 350 rupees 350 is related to the sales which are affected after 1st July 2022 and remaining belongs to pre-incorporation. Next, advertisement expenses were directly proportionate to the sales. Means uh, advertisement is 5250. We have to distribute to pre-incorporation and post-incorporation on the basis of sales. Next, sales for the period from 1st April 2022 to 31st March 2023 was rupees 14,70,000, out of which sales up to 30 June 2022 was rupees 2,10,000. Prepare statement showing profit prior to and post incorporation for the year ended 31st March 2023. Okay, so this was the question. On the basis of the information, we have to prepare a statement showing profit prior to means profit pre and after incorporation of the company. So to prepare the statement showing profit pre-incorporation and after incorporation, we have to prepare the table. So in this way, you will prepare the table, particulars on which basis we are going to allocate the items, then ratio and how much is the total of that item. Then pre-incorporation, in pre-incorporation I have prepared two tables, amount, one is the debit side and credit side of the pre-incorporation. Same way for the post incorporation, two columns I have prepared for the amount. One is for debit side and one is for the credit side of post incorporation. Now to solve this example, first of all we have to take out some important notes. Okay, important dates. In profit prior to incorporation and after incorporation, we have to take the date on which date the company is incorporated. Okay, and what is the financial year end. So here I have note down the date of acquisition, means the date on which date the business started or the company started. So in the example they have said that 1st April 2022. So the date of acquisition is 1st April 2022. So what is the date of incorporation, means when did the Citizen Company Limited took over the famous company. So incorporation date is 1st July 2022. Here the company Citizen Company Limited incorporated on 1st July 2022 to take over the running business of Mr. Famous. So acquisition date is 1st April 2022. The date of incorporation is 1st July 2022 and the financial year ends on 1st March 2023. Okay, now on this basis of the date, we have to first calculate the time ratio, then we have to find the sales ratio also. Now in the time ratio, we have to find the pre-incorporation month and post-incorporation month. So see the acquisition date is on 1st April 2022 and the date of incorporation is 1st July 2022. So that means the period between 1st April to 1st July, that period will be called as post incorporation, and the period from 1st July to 31st March, that period will be called as post incorporation. That means in pre incorporation from 1st July to 1st April to 1st July, there are 3 months, and from 1st July to 31st March there are 9 months. So in the time ratio 3 and post incorporation 9. So 3 ones are 3 threes are 9. So time ratio is 1:3. Now in the for the calculation of sales ratio, here in the example they have said that the sales for the period means for entire year from 1st April 2022 to 31st March 2023, the sales are rupees 14 lakh 70,000, out of which the sales up to 30 June 2022 is rupees 2 lakh 10,000. That means 1st April to 30 June, the period is of pre-incorporation. So in pre-incorporation sales out of 14 lakh 70,000, so out of 14 lakh 70,000, 2 lakh 10,000 belongs to pre-incorporation sales and remaining amount belongs to post-incorporation. That means 14 lakh 70,000 minus 2 lakh 10,000 and remaining is 12 lakh 60,000 belongs to post incorporation. So ratio 21 ones are and 21 six are 6. So sales ratio is 1:6. Okay. So here we have got time ratio, we have got sales ratio also. Now next is what? Now we will allocate these particulars as per the basis. Now salary. Total salary is 18,000. Now salary is to be distributed first. Before salary we have to distribute the gross profit. Now always gross profit is allocated on the basis of sales ratio. First we'll take, always start preparing your statement of showing profit prior to and after incorporation by distributing the gross profit. So gross profit is distributed on the basis of sales ratio. Sales ratio is 1:6. The total sales ratio is 1 lakh 5,000. So 1 lakh 5,000 divided by 7, multiply it by 1. So how much we get? 15,000. Write it in the credit side of pre-incorporation and remaining 90,000 belongs to post incorporation. Okay, so 1 plus 6 7. So how I have distributed gross profit? Total gross profit is 1 lakh 5,000. So 1 lakh 5,000 divided by 7, multiplied by 1, or 1,05,000 multiplied by 1 divided by 7. So whatever is the amount, give it in the pre-incorporation, and remaining amount will be in the post-incorporation. Now gross profit is done. Next is salaries. Salaries are allocated on the basis of time ratio. So time ratio is 1:3. Total salary is 18,000. So from 18,000, 4,500 belongs to pre-incorporation. Write it in the debit side, because whatever items are in the debit side, the entries will go in the debit side, and if the entries of the credit side will go in the credit side. 13,500 is of post incorporation. After salary, primary expenses. Primary expenses belongs to post, so there will be no ratio. The entire amount, that is 1,000, will go in the post incorporation period. After primary expenses, insurance. Insurance is allocated on the basis of time. The ratio of time is 1:3. The total of insurance is 1,200. Out of 1,200, 1 multiply 1,200 multiply by 1 divided by 4, we get 1,200. Sorry, 300 is of pre-incorporation and 900 is of post-incorporation. After insurance, commission. Commission is related to sales. So commission we have to distribute on the basis of sales ratio for pre-incorporation and post-incorporation. Sales 1:6. The total commission is 2,625. Out of this, 375 belongs to pre-incorporation and 2,250 is of post-incorporation. Next is MD remuneration, that is Managing Director remuneration. This remuneration belongs to post-incorporation. So write it post. There will be no ratio. Total MD remuneration is 9,000 rupees. We have noted down in the post incorporation. In my last videos, I have explained you the allocation of this thing allocation item list. I have prepared in that video which items will be allocated in the time ratio and on the basis of sales ratio. So do watch that video. Next, after MD remuneration, next is rate and rent and taxes. Amount is 3,000. Rent, rate, uh, rent and taxes are allocated on the basis of time ratio. Time ratio is 1:3. Total of time rent and taxes is 3,000. 3,000 multiplied by 1 divided by 4. So in pre-incorporation, 750 rupees. In the post-incorporation, 2,250. 250. After rent and taxes, discount. 2,250. 2,250 After rent and taxes, discount. Discount is to be distributed on the basis of sales. The sales ratio is 1 to 6. Total discount is rupees 350. From 350, 50 rupees belongs to pre-incorporation, and in the post-incorporation 300. Next is advertisement. Advertisement, there is the adjustment in for advertisement. For advertisement, they have said advertisement expenses were directly proportionate to sales. That means advertisement we have to distribute on the basis of sales ratio, that is 1 to 6. Advertisement, total of advertisement is 5,250. For pre-incorporation 750 and 4,500 is of post-incorporation. Next is bad debts. Bad debts, there is adjustment, so we will write actual. For bad debts, they have said bad debts rupees 350 relate to the sale affected after 1st July 2022, and the remaining relate to the pre-incorporation. That means out of 1,250, 350 belongs to post incorporation, and remaining, that is 900, belongs to pre incorporation. Okay, see here I have did the adjustment. Total bad debts is 1,250. In the adjustment they have said that 350 belongs to after 1st July. From 1st July to 31st March, the period is called as post incorporation, and from 1st April to 1st July, the period is called as pre-incorporation in this example. That's why 900 and post, in the post 350. Now net profit, means net profit we have to calculate. Now see, here we have passed all the entries and we have solved the adjustment also. Now we will do the total. We will close the post incorporation credit side, debit side, and in pre incorporation credit and debit side we will close. So in, and we will find the net profit also. So the this side 900. Now add all this thing. So you will see that the debit side is less and credit side is more. The difference will be called as net profit. So difference is 55,950. Now the balance is getting to. So this will be called as net profit. Now for pre-incorporation, credit side total is 15,000. Debit side is less. The difference between credit side and debit side is 7,375. Both the credit and debit side are tally for the pre-incorporation, and post-incorporation debit and credit side total is same. Now if we add 7,375 rupees plus 55,950, the total we will get 36, the total we will get 63,325. Okay, so you will see the net profit is same in the question as well as in the solution also. So in this way you have to prepare the statement of showing profit prior to and after incorporation. So this is the example which we have solved. Okay, I hope students you have understood today's session. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.